I've realized that the more actions you take, the more mistakes you're going to do. Good fund manager having a bad time is the best time to give him money. The only thing which is not in your control is returns. I will give you a very important metric. Even if you were to choose performance, personally, I don't give too much weightage on fund selection.
Okay.
And I'll tell you why.
There's SWP that everyone is talking about. What is your take on SWP?
I always believe in goal-based investing because finally, returns का आप क्या करोगे? If it didn't help you achieve your goals, it is useless, right? So my call on category, if it goes right, I am far better than going on scheme right in the wrong category. The whole world does exit after 3 years of underperformance, which is actually the worst thing to do. मैं बोल नहीं सकता, but और मैं follow भी नहीं कर रहा हूँ, but even if tomorrow I can restart this thing, और मेरे पास 100 crore है, I'm willing to put in one fund.
Hello and welcome to Power Academy. In the last video, we saw Gajendra's journey from investing 10,000 per month to 30 lakhs per month. We spoke about how he built 50 crore portfolio using different mutual fund categories. In today's video, we will learn about 1. How to select the right mutual fund. 2. How to assess your fund manager. 3. Should you invest in NFOs? 4. How many funds should you have in your portfolio? 5th, how to manage your portfolio if a fund is not doing well. 6th, when to exit and different exit strategies that you can use. That being said, let's get started. Hi Gajendra. So far we discussed about the emotional biases in investing. We spoke about how if you were to start your mutual fund investment journey today, how to navigate the different categories. Be sequential, start with one category, move to active equity funds at the last, right? Now that I am at that stage, I'm a retail investor who is wanting to have that alpha over the market. And now there are multiple mutual fund schemes that are in the market. Let's start with how to navigate through all of those mutual fund schemes. There are tens of metrics around it. What is your framework on filtering out the noise in all of these schemes?
Absolutely. So fairly simple. See, there are things which are under your control. There are things that are not in your control, right? So when you select a mutual funds, what are the things that are under control? You can select a mutual fund based on the risk. How much risk the fund manager is taking. And right now, there is something called riskometer by SEBI, which gives you very high risk, low risk, medium risk. That is the first defense for a normal investor. वो सब mutual fund में होता है, website पे मिल जाता है. Now, cost you can control. There is something called TER, total expense ratio. Okay. Every mutual fund has a cost total. If the TER says it's 2%, which means this is the cost that you'll be paying every year by investing in that mutual fund,
Okay. In TER, what is like the ideal range that one should have? Is there a number there?
Many websites like Value Research, Money Control gives the range of TER.
Okay.
What is the lowest fund in that category? Ka TER kya, highest kya? If your fund is somewhere in the middle, that's okay. There are direct plans and regular plans. Direct plans is meant for those people who are not going through an advisor.
Correct.
And suppose if our audience is DIY, do it yourself.
Yeah.
Then direct plans for most of the equity funds would be 0.5, 0.6, 0.7 range, which is reasonable.
Okay.
Yeah. If the direct plan TR is 1.25, it's on the higher side then.
Okay.
But don't be so specific on cost part. I've seen like fund managers, if they're charging 0.5% extra also, but over the long term, they've given 4% alpha. And how does this cost also really matter? I would rather choose a good fund manager with a high cost than a bad fund manager with a lower cost. Then the only thing which is not in your control is returns. Right? But unfortunately, people are chasing returns only. I will give you a very important metric. Even if you were to choose performance, don't choose last 1 year, 3 year, 5 year. There is something, Navda, called rolling returns.
Okay, yeah. I think there's trailing return and there's rolling return. Could you explain
very
the difference?
Very simple. Trailing returns हमने जैसे बताया आज से last 1 year में कौन best था.
Okay.
So from today to last 1 year.
Okay.
From today to last 3 years. So that's trailing return. But rolling returns is every day. In the sense, suppose if I want to track from 2010 till date, every day का 5 year return क्या रहा है?
Okay.
1st January 2010 to लेके 1st January 2015 तक is one record. 2nd January 2010 to 2nd January 2015 is another data point. 3rd January 2010. ऐसा करते करते I would have thousands of data points. I'll take the average of these 5 year returns of all these data points, that gives me rolling returns.
Right. So you're averaging out all the volatility.
All the volatility. Then you know कि किस fund manager ने को luck हुआ था, ये किस fund manager consistency दिखाया है.
Got it.
That is the best metric even if you are tracking only returns part.
Okay.
Okay. Then another thing that you have to see is, so there is something called Sharpe ratio, which means risk adjusted return.
Okay.
So whatever returns you are getting, you have to adjust it against risk.
Okay.
And the higher the number, which means per unit of risk that you are taking, the return that you are earning is higher compared to the per unit of risk that you are taking.
Okay.
Any fund manager who are able to generate higher returns per unit of risk means a good fund manager.
Got it.
This is called Sharpe ratio, which is printed on all documents.
Okay.
Higher the Sharpe ratio, better is the track or or performance of the manager. Then there is something called standard deviation of the, which means how volatile it will be. जैसे you said ना कि I can sleep peacefully till 90, but 90 से गिरेगा तो मुझे नहीं चाहिए. So there are fund, I can tell you कि ये और ज़्यादा गिर सकता है. So don't come into this fund. This will be high volatile fund. There are funds which are low volatile funds within equity space also.
Right.
It's not कि equities are volatile and hybrids are less volatile. Within equities also you can compare which is more volatile than the other.
Okay.
Then another thing that you have to see is if you are in an active fund, the fund manager's first threshold has to beat the benchmark, no matter what. They are paid for that activity. Give them one full cycle of economy, which can take 7 to 8 years. If in full that cycle they have still underperformed, then I don't think they have the right to manage money, right? Because you will be better off putting in index fund. So as an investor, you should carefully see, is my active fund manager able to beat benchmark over a long period?
And that's what is measured by alpha.
That is what is measured by alpha.
Is there a benchmark value, or should be at least more than 2 or something? Is there something?
As long as if they are able to beat benchmark even by half a percentage point or 1 percentage point, I'm okay. I'm not really worried about category returns. You know what is category returns? Within that category, how each fund managers have worked. How many quartiles are there in a category? There can be 4 quartiles, right? Top, second, third and fourth. As long as your fund in the long term is in first 2 quartiles, you're doing good. I would never want my fund to be topmost in the category.
Okay.
Because if somebody is at the top right now, number 1, वो एकदम नीचे भी आएगा. तो मतलब इतना ज़्यादा volatile भी नहीं चाहिए. I want if he's in the top 2 quartiles for a long period of time, I'm quite happy.
Understood.
But at the same time, it has to beat benchmark.
Got it. So, so one is beating the benchmark. Then second, you spoke about standard deviation and the Sharpe ratio. Then there are, just wanted to understand more, and because when I go to a portal, right, I see Sortino, I see n number of ratios. Are there anything else for relevance?
Zaruri. Because see, the more data points you try to gather, the more complex you are making your.
Correct. We are overcomplicating
You are overcomplicating, and then you will miss the big picture.
Got it.
Right, and nobody can get it fully right anyways. Right, beyond a point, it doesn't work. So just keep it basic. Just keep it simple. Something that you are able to follow. Something that you are able to stick to. That is more than enough. So a common person can choose this, but these are, again, we are talking about quantitative parameters.
Right, right.
What about qualitative? How do you know this fund manager is really good?
Right.
One reason why we like to give money to a fund manager who has spent 20 years, 25 years in the industry, because he has seen multiple cycles. So we know that he is not going to make lot number of mistakes.
Right.
See, nobody is foolproof in the world. We are all human beings. We are going to make mistakes. But if you end up making 3 mistakes and I end up making 8 mistakes, you are a winner, right?
Yeah.
So I would like to give my money to those people who will make fewer mistakes.
Got it.
If somebody's new fund manager has just 3 or 4 year track record, I'll not be very comfortable unless he has seen cycles, right?
Right.
You can see in the fact sheet how long he has been managing this fund.
Okay.
You can see in good times what was his performance, in bad times what was his performance. Everything is right there on the company's website.
Okay.
So any mutual fund that you want to track, you can go and look at the company's website. वहाँ पे सब दिया हुआ है.
Right.
One other place where you can find fund managers का profile, and this thing is Morningstar. जहाँ पे they write qualitative ratings about the fund manager.
Okay.
Oh yeah, not many website provides this. They do detailed interviews about that fund manager and write it. And one hack I want to give, if suppose you want to know more about the fund manager, आजकल क्या है, lot of interviews are there on YouTube of that fund manager. Just watch few interviews of them, understand what is their thought process when they invest your money. If you like that thought process, you can give money to it.
Got it.
Having said that, personally, I don't give too much weightage on fund selection.
Okay.
And I'll tell you why. For me, सबसे पहले the big picture is asset allocation matters. How much money I'm putting in which asset class at this point of time.
Like
right?
within equity, the
Within
categories we
equities
spoke
or
about.
even equities in the first place or not.
Okay.
Is this a great time to put in equities, or if I think equities is very expensive, is there other asset class wherein I can better money? That is my bigger question. Suppose I've decided now within equities, India versus China right now. If I'm thinking China is more better, for me that weightage is big. Then let's say within India, which sector right now or which market cap, small versus large,
right,
or sector themes, again that. Within small cap, then if I choose A fund manager or B, it doesn't really bother me much.
Okay.
So I'll give you a classic example. In COVID times, you remember I told that I put in all my money in small cap.
Yeah.
I chose two funds. एक फंड ने आज तक रिटर्न दिया 31% कैगर, द सेकंड फंड हैज गिवन मी 35% कैगर.
Okay.
Right? The difference of 4%, which is actually big. But had I chosen the best of large cap fund, that would have given me yet only 24% CAGR. And these two very underperforming, not the top of the line funds, still 31, 35, better than the best performing large cap. So my call on category, if it goes right, I am far better than going on scheme right in the wrong category. But one hack I'll like to give you, not many places you'll find this hack. The fund that has performed very well in the last 3-4 years, avoid that.
And why so?
See, every fund goes through cycle. A fund manager may be very good, but he can't be a god. He won't be a god in the sense like पूरा 20 साल top में नहीं जाएगा. 3 साल अच्छा करेगा, 3 साल खराब करेगा. So good fund manager having a bad time is the best time to give him money.
Got it.
Right? In reality, this doesn't happen. The good fund manager will only get the money when his performance is at the peak. Lot of money will come, and then when we'll have the downturn, they will all experience negative returns. Lot of money will go at the bottom when he needs the money. And again, when performance comes back, he will have no money to ride on to this performance.
The AUM follows returns, the classic.
All the time. So, important hack is when a good fund manager is underperforming, when his style is not working, that's the time to go aggressive on that fund manager.
Got it. ये सारे metrics, yeah, all of this is based on the past record, or you know, the fund manager is in industry for a couple of years. But then there are NFOs also coming. Again, retail investor, being retail investor, you know, is always curious about what's the new thing on the block. A, do you suggest that, you know, a DIY investor should even look at it? And if yes, what's the framework to approach that?
No, I'm not a big believer of NFOs, not at all. अगर वही थीम का ऑलरेडी फंड मार्केट में है, ओके, एग्जिस्टिंग फंड हाउसेस, एग्जिस्टिंग ऑप्शंस है, आई एम नेवर गोइंग टू इन्वेस्ट माय मनी इन एनएफओ. I will only invest in NFO which this kind of theme or investment was never there. It's first time, and if I have huge belief on that kind of, you know, policy or that kind of objective of that fund कि अच्छा करेगा, ये नया अलग है, बहुत अलग है, and just खाली अलग होने से भी नहीं करना है. Can it make money for me? Is this so attractive right now that I can really benefit from it, right? Going with an existing fund better because it already has a track record. You know कि क्या किया है, right? Secondly, a new fund offer will always be more expensive.
Okay, why?
Because in a new fund, the size is lower.
Okay.
Lower size में SEBI allows you to have more expense ratio. As the fund size becomes higher, your expenses has to come down.
Okay.
So compared to new fund, if an existing fund is 5,000 crores, I'm paying, let's say, less than 2%. In a new fund offer, I may be paying 2.5% also.
Oh, okay.
So मैं क्यों दूँ?
Okay.
That is one reason why I'm against NFO. But क्या होता है? Many retail investors buy it because it is being advertised heavily. Peer groups, everybody is talking about it. तो उसको लगता है, am I missing on something? FOMO factor.
Yeah.
But as a seasoned, you know, advisor in this thing, I would be very skeptical about a new fund unless it is very, very compelling.
Got it. Understood. How many funds do you recommend one should have in their portfolio?
Generally, not more than 5 funds. 5, you know, एक fund में जब आप पैसा डालते हो, you're putting your money 50 companies within that one fund.
Correct.
Technically, you know, मैं बोल नहीं सकता, but और मैं follow भी नहीं कर रहा हूँ, but even if tomorrow I can restart this thing, और मेरे पास 100 crore है, I'm willing to put in one fund itself.
Okay.
Because see,
overlap होना शुरू हो जाएगा.
Overlap होना शुरू हो जाता है, and if Warren Buffett were to come and tell you, Navda, I want to manage your money, would you be willing to give all your money to Warren Buffett?
Why not?
Why not, right? Correct?
Yeah.
तो यहाँ पे इंडिया में वॉरेन बफेट जैसे 5-6 फंड मैनेजर्स है, बट यहाँ हम एक पैसा किसी को नहीं दे रहे. वी आर गिविंग टू 10 फंड मैनेजर्स, बट ऑल ऑफ देम हैव बीटन वॉरेन बफेट इन द लास्ट 10-15 years. Warren Buffett says diversification is only meant for those people who don't know what they are doing. But अगर आपको पता है कि आपको इससे रिटर्न बनाना है, then if you are spreading it too thin, then you are only preserving capital, you are not growing it actually, right? कोई अच्छा करेगा तो कोई खराब भी करेगा, you are net zero,
right?
So मैं 4 या 5 क्यों बोल रहा हूँ कि चलो आप एक सेक्टर में डाल रहे हो, एक इंटरनेशनल फंड में डाल रहे हो, that's how, but more than 4 or 5 is actually you're creating zoo in your portfolio now. See, and second, one again hack I'm giving, if you're only investing 3 or 4 managers or 4 funds, you'll start actually tracking them. क्योंकि आपको ज्यादा काम नहीं करना, आपको मालूम है ये 4 फंड हाउसेस को दिया हुआ है, ये 4 फंड मैनेजर के नाम पता है, हाउ डिफिकल्ट इज दैट, बट अगर आपने 20 में डाल दिया, यू विल लूज ट्रैक, फिर आपको पता ही नहीं है कौन क्या कर रहा है, कौन आया कौन गया, 3 या 4 में तो है तो आपको सब पता रहेगा.
Right. One, as a retail investor now, how should my ideal portfolio look like? What is your
goals
suggestion?
first. You need to know who you are. If you don't know who you are in the stock market is the most expensive place to find out. If you can't take high risk, like you said, be with moderate risk, it's okay. You don't have to look sexy to be aggressive, in the sense, be okay, that's fine. Know your return expectations very well. 12% चाहिए, 15 चाहिए, 8 चाहिए, क्या चाहिए आपको, and align your portfolios accordingly, right? Don't do too much tinkering. Keep simplicity as a whole thing, not more than 3 to 4 funds, right? 3 साल से पहले का पैसा डेट फंड्स, 3 से 5 साल का पैसा हाइब्रिड फंड्स, 5 एंड बियॉन्ड इक्विटी फंड्स. ये अगर आपने कर लिया, यू आर गुड इनफ. इफ यू हैव लंप सम, इन्वेस्ट टुडे. इफ यू डोंट हैव लंप सम, इफ यू हैव मंथली सेविंग्स, डू SIP. As simple as that.
Right.
So ये करोगे तो I think broadly you would have done well.
Now I started my SIP and I don't know what to do with that. There's some money there. When do I exit, if I do, or when do I rebalance my portfolio fund? What is your approach on the whole exiting and rebalancing of portfolio?
$1 million question, but not easy to answer. Again, I'm giving my viewpoints, what I've done. So generally I believe, as far as equities are concerned, the best time to invest is today, when you have money. The best time to withdraw is when you need money. Make sure in between you have given 10 years, because 10 साल में good, bad, ugly सब देख लिया, your money has made decent returns. You will never be disappointed. That should be your first benchmark. By at least by doing this, you are not breaking your own rule. You are saying कि जो भी पैसा डाला था उसमें 10 साल में I've stayed invested. Second thing, I would like to break my fund or stop my fund or withdraw from my fund the day I've achieved my goal. जिस चीज के लिए मैंने पैसा डाला था, if I put in for my children's education and now my children's education goals are nearing and I have completed the goal, I should take out the money. Market अच्छा हो खराब हो, how does it matter? Right? I needed that money. That corpus is now good enough and I want to take it out, right? I always believe in goal-based investing, because finally returns का आप क्या करोगे? Whether it is 18, 20, 25, if it didn't help you achieve your goals, it is useless, right? Now, let's say you are in between your journey, your funds, you have invested with a certain goal in mind, but 4 साल हो गए markets नहीं चले हैं, right? And your funds are giving much less return than you anticipated. You were anticipating 12% return, अभी last 4 साल का return 8% आया.
Correct.
You might become nervous, right? Suppose you go from Bombay to Delhi, you are in Rajdhani Express, right? And the train is delayed by 2 hours, this thing. Do you kind of get out of the train in between? No, we don't do, right? We have the patience on the Indian Railways and on the driver on the train, and 99% of the time they will reach Delhi on time. They make up their speed, right? At some point in time. Same thing with the markets, right? So अगर पहले 4 साल नहीं चले हैं, have patience. Markets may give no results in 4 years, and 5th year they may go 100%. Average return comes to 15%. Same thing can happen with a fund. So I have invested in funds, Navda, where my mid cap fund at a point in time was 29th out of 29th rank. मतलब सबसे इससे बुरा कुछ नहीं हो सकता है, right? And the fund manager of that fund was having a pity on me कि गजेंद्र तुमको मेरा ये एक ही fund मिला था इसमें डालने के लिए. I'm feeling so bad for you, the fund manager was saying, CIO of the company. But I said I never complained about it. And fast forward 2 years later, that fund was number 1 out of 29. Oh. Making up all the, this thing in returns. So I've realized that in the long term, the returns, come back. But very few people earn this because most people would have chugged out from that journey in between, right? Giving up the patience. So for me, the only time I would like to pull out of a fund is if I know that I have got huge oversized returns compared to category and compared to other peer groups. You remember I said if the fund has done exceptionally well over a 3-4 year period of time, I would like to pull out.
Okay.
Because I know this is not repeatable. And अगर उसका outperformance आया तो अब underperformance भी आएगा.
Okay.
Right? So I would like to, so जैसे PSU में मैंने निकाला because PSU sector has peaked in my view.
So what I understand is, you exit when you are getting the signal that it's outperformed, and then you have made your returns.
You made your returns, you have outperformed massively.
Massively,
this is not going to continue. Then maybe exit.
In terms of underperformance, right? And of course, we are investing for the long term.
The whole world does exit after 3 years of underperformance, which is actually the worst thing to do. So I'll give you one instance. I don't want to name the fund manager or the fund. That fund manager till 2020 or 21 was the best performing fund because his style was quality style.
Okay.
Quality was performing that point of time. Last 3 years, quality is out of favor. Like HDFC banks, Kotak Bank, these are quality stocks, quality companies, DMart. They're out of flavor. So these stocks are trading at bottom. And if that fund invests in all the quality companies, naturally your fund is delivering bottom percentile performance. After 3 years of performance, all the people are now exiting those funds. And I, on the other hand, know that it's in a matter of time it will turn around. 6 months, 12 months, 2 years. This is a time to go all in now into that style. But general retail investors are pulling out because they saw last 3 years bad performance.
Got it.
This is contrary to, again, the basic thing, what I believe.
Understood. So then the underlying assumption is that because you know that the fund manager is doing things right. Now, I as a retail investor, how do I build that trust ki nahi, this will go up? Like, are there any signals or anything that I can see in the fund manager or the fund house's style to make me believe that no, they are not doing anything wrong? Because usually when I see 3 years of consistent negative or like flat returns, I feel very worried कि इसके लिए थोड़ी मैंने म्यूचुअल फंड में पैसे डाले थे. So what's your take?
और है नवदा, see अगर आपने, let's say if people have invested in 5, 6, 7 funds, even if one fund is underperforming massively and is आपने कितना भी टाइम दिया वो बहुत खराब चल रहा है, I would still be okay. Okay, because I've realized the more in and out you do, that does more harm than being so lazy in your this thing. Because by being lazy and you have not touched, you have let the compounding work. अगर वो इंडेक्स से 2% कम भी दिया है, but because आपने कुछ नहीं किया और आपने देखा नहीं और आप डालते गए, you have done more wonders by creating wealth through laziness. And I've seen a lot of active people doing in and out and not creating wealth in the process because they थोड़ा सा भी इधर उधर होता है, they want so perfect and perfect किया है अपने दिमाग में, but result is not perfect.
Got it.
In my own portfolio, as I said, I've seen many funds which have been okayish, but 15.5, 16% CAGR आया है. And I'm more happy by looking at this absolute CAGR than seeing कि whether उसने benchmark को beat किया है कि नहीं किया. Though I just said कि benchmark को beat नहीं किया तो that fund manager doesn't have the right to be a fund manager.
Right.
But मैं जब in the long scheme of things देखता हूँ कि यार if I want 15% return, which is double then of a fixed deposit return, I am so fussy about कि इसने किया है कि नहीं किया है, right? और मेरे बाकी जो फंड है उन्होंने तो बहुत ज़्यादा बीट कर दिया तो net my portfolio has done well.
Right.
But अगर मैं ज़्यादा in and out करता, perhaps I might have missed that rally also in the first place, right?
Right.
So I've realized कि the lesser you do churning in your portfolio, the lesser actions you take, the more actions you take, the more mistakes you're going to do.
Right. I think that's the biggest learning I'm having. Like wealth creation में जितना simple रखो, उतना ही better.
उतना ही अच्छा है.
Yeah.
This I've realized after 20 years of being in this thing, right? Keep it just boring, simple.
Yeah.
Live with underperformance also for some time.
Yeah.
As long as your SIPs are going, as long as you're not timing it, as long as your big picture is clear, as long as your goals are clear, as long as your expectations are clear. If you are happy expecting 12 to 15%, तो okay. If your expectations are 19-20%, you'll be in a misery, right? Because अभी 19 आ रहा है, but 2 साल बाद वो 12 आएगा, तो you will not be able to accept that.
Right.
Life में सबसे बड़ा why there is happiness or sorrow, the mismatch between reality and expectations.
Yeah.
If your reality beat expectation, you are very happy. If your reality doesn't beat expectation, you are sad.
Yeah.
Keep your expectations low.
Right.
That's what Charlie Munger says, you will always be happy in life.
Yeah. No, absolutely. In terms of exiting from a mutual fund, right? I mean, not in terms of rebalancing, but so suppose my goal is achieved,
Yes.
right? And for me as an investor, now there are tax implications, there are exit loads. How do you decide on how to manage and navigate that?
Generally, I take a buffer. I generally keep lower conservative rate of returns as expectation. Like for long term, I'm taking 10% returns भी अगर आ गया. And if my fund has given 13% returns, so I've overshot my target, right? I've made more money. So I don't mind paying taxes because it's not just me who's paying taxes, everybody is paying taxes, right? So we are on all equal footing. Exit load is only applicable if you're withdrawing within last 1 year, and that too a small chunk. But if your investment has been for 10-15 years, there's no exit tax implication.
Got it.
Beyond this thing, there's no other thing anyways, right? So I always keep it simple. If you're approaching goal, withdraw it and use it for what purpose you set out your journey for.
Got it. Understood. In terms of withdrawal, right? I think you said you take out money when your goal is achieved. There's SWP that everyone is talking about. What is your take on SWP and withdrawing money, basis that?
SWP is a fascinating thing. It's just reverse of SIP. When your money, you're in an accumulating phase, you do SIP. SWP comes in when you're in withdrawal phase. When does you require this? 2-3 reasons. One, you've hit retirement or something, and you need regular income as a pension or to this thing. So that is when SWP comes. Second is you have lost your job and you've created big corpus. Now again you need monthly income for survival. You can start SWP.
Right.
Or you are on a sabbatical, right? So SWP is only needed when you need monthly regular withdrawals from your portfolio, either for a short term, medium term, or for a long term. But if you don't need money, don't do SWP. I have seen people asking me, sir, एक तरफ से मैं SIP करता हूँ, यहाँ से मैं SWP निकाल लेता हूँ, and again I'll put back that into SIP. I said, आप कान यहाँ से पकड़ो and कान यहाँ से पकड़ो, it's one and the same. मतलब you're overcomplicating stuff.
Yeah.
So as long as you don't need money, keep on putting it, create this big corpus. The day you need money, start SWP from this corpus and enjoy life. Keep it simple.
I think lots of sharp takeaways from this section, Gajendra. I think to assess out of those 4,000 plus mutual fund schemes. First, the equity debt. Now, if you are in equity or whichever category, first you classify or filter out basis the risk.
Correct.
Then you have cost.
Correct.
The expense ratio, TER, which should be under 1% if you are a DIY.
Correct.
Then there are quantitative ratios. There's alpha, you should beat, like the fund manager has to beat the index. There's Sharpe ratio, there's standard deviation. 3 very important metrics that one should refer to.
Yeah.
Then there's qualitative aspect, which is on fund manager. And I didn't know, you can also look at fund managers, interviews in Morningstar and all of that.
Yeah.
So I think that will be helpful for a DIY investor to get knowledge of what is going on in the fund manager's mind. And the last and my biggest takeaway is 4-5 mein rakho, life simple rakho, and then just track those 4-5 fund houses. Make life simple.
And one thing which I anyway shared from my studies, have a contrarian approach. If you want to make outsized returns in markets in mutual funds, have a contrarian, something that has not worked well. A sector or large cap, like अगर 4 साल से जैसे large cap इतना अच्छा नहीं चले, अभी small cap और mid cap ही चल रहे हैं. So as a contrarian, if you're more in large caps, most likely either when large caps जब चलेंगे तो आपका अच्छा बनेगा, ये market गिरेगा तो you'll fall much lesser compared to small caps.
Right.
So have a contrarian approach, which
Within
means
the
buy low, sell high, kind of thing. At portfolio level, at asset allocation level, at category level, at scheme level. You remember how I told you at scheme level, the scheme which has performed the best,
Correct.
Be skeptical. The scheme which has not performed good, again contrary to what people are doing.
Right.
Because crowd is never right in investing. Crowd is usually wrong. People find mental comfort within a crowd.
Right.
But आपको crowd से हट के करना पड़ेगा if you want to make outsized returns.
Right.
But otherwise you have summed it up so well. I just thought थोड़ा तड़का लगा देता.
No, absolutely.
But most importantly, I would like to say which mistake I made. The biggest mistake which I made was starting late. I lost 6 years trying to figure out कि best दिन क्या है, best कब करेंगे, इतना पैसा आ जाएगा तब शुरू करेंगे. Start today with $1,000, $2,000. You will make mistakes. You will learn from those mistakes. But आप start ही नहीं करोगे ना, तो you will regret later. And do all the mistakes early in your life, not later. Because the cost that you're paying will be much lower when you're starting out. Later you'll be paying much higher cost, much bigger amount, right? And market is a learning machine. You will always remain a student. You will never become master. You never get old here. You get more wisdom only.
Yeah.
Right. So these are the things. Finally, if you're a good student, this will never let you down. You know, markets will never let you down. It will reward you for your patience, discipline. So these are some of the learnings that I had.
Got it. Great, Gajendra. I think it's been super jam-packed learning. I learned so much, and I hope through this podcast we can help other people also start their mutual fund journey. And thank you so much for taking out the time. I had so much fun.
I wish them all the best for their future.
Absolutely. Thank you so much.
My pleasure.